All right, and welcome back for another episode of Carnivore Trades. Today is Friday, January 6th, 2023. If you've not done so already, please give it a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, what a day we've had today on Wall Street. S&P up 2.5%, triple Qs up 3, and the Dow up 2.3% as well. Take a look at the bidding here going on. Catalyst this morning was the ADP jobs number, or excuse me, the actually non-farm payroll number. Yesterday was ADP, and the NFP number came in hot. So why is the market up? It's pretty simple, just a sell the rumor, buy the news type move here. Yesterday, what my analysis of the situation is, yesterday we were down off of the ADP number, and that basically just told, smart money that, hey, the non-farm payroll number is going to be down too. So it's priced in. So, and I said yesterday, look, it just looks too easy here. We have a down move, an inside bar here. These tend to fail a lot on the spiders, more so than other equities. And, just anecdotally, the bears on my timeline have been very loud the last couple of weeks. And it just looks to me like we need to break this range to the upside. And before the market can make a push lower, we do need to make a lower high. We need to reset the technicals, specifically on Apple and Tesla. By the way, Apple this week is they are saving that 129 handle. So 129.04 was the low from June, and it's the second week in a row that is getting saved. Tesla also coming off the lows, that is getting saved at 110. So there's that, there's that 110 pivot right there on Tesla. And again, they announced this morning they were slashing prices in China. The stock gap down to 102. Should be an easy short. You just FOMO into puts, right? Wrong. When it gets too easy, that's usually when it's about to be the end. And Tesla up 2% today, despite gapping all the way down to 102 there, and a huge monster surge. That plus Apple really just lifting the market here. And like I've said the last couple of days, it's like the market's just waiting for Apple and Tesla to get a bid. And we have that now. Also, the semiconductors, what's another thing I said yesterday? I said, look, this is not a coincidence, guys. They did not close that, or they did not take that low out from a Wednesday by 1 penny. That's not a coincidence. Okay, the semiconductors are a leading indicator, and there's a reason they did that. And semiconductors here, monster move today, up 4.5%, getting above this red bar here. So that's a failed inside bar there. Take a look, at the ES. This is a failed inside bar as well. So right there, and obviously on the spiders, that's well above these pivots here now. Although we are backing off here in the last 10 minutes, possibly some day traders closing out some longs and whatnot. But overall, that's just what happens. Fundamentally, I totally understand where the bears are coming from, and I'm in that camp as well. But in the short term, the reason why I've been bullish is, market mechanics will take over in the short term. And that's what we're seeing here today. Too many people off sides. And in fact, if you look at the ES this morning, take a look at, they did this really dirty, by the way. This was super dirty what they did. So this morning, this is 820 or 810. And then we start to sell off about 10 minutes before the NFP number comes out. And why this is significant is because we were down. I told you yesterday, if we're down big into that number, we'll probably rally. And you can see here, if I flip over to the hourly, this is that lower trend line that we've been watching here on the ES. So they dipped it below that trend line, and then they surged it, just got back, just got the last bears basically bagged, and they surged it. And then they really did it dirty with the gap up, and they tried to, push it back to gap fill. So the bears came in and tried to break this down, and they just got their heads ripped off here. Really, to me, they would have needed to keep this below 382 on the spiders here by the open, and they did not do that. So any attack here that they made during market hours was likely going to get bought, and that's exactly what happened here. So big short squeeze. And yeah, ADP number really just priced it in, if you ask me. That's really the bottom line. Also, by the way, next week we have CPI. So jobs, obviously they're important, but the CPI is what the market's really going to look at here. And I think for sure the 2-year treasury right now is telling us that we're going to get a soft CPI. The jobs data came in hot the last 2 days. That should mean that the 2-year has come. That should mean that the 2-year note should be selling, meaning the yield should go up. and the 2-year note is up 35 basis points. Guys, that's a huge move for the 2-year. By the way, someone pointed this out to me last night. So we did have that failed daily inside bar there, but this is still valid on the weekly. So that is something that I stand corrected on. You still have a weekly inside bar here on the 2-year, which can move up. So just be aware of that. But the 2-year does seem to be signaling we're going to get a soft CPI next week, and I think the market's starting to price that in. By the way, take a look at ZB. Wow, a whopping 1.5% on the 30-year. That is, like, if you guys are newer, and you know, this might not look like much, this is a massive move. Like the bond market, the 30-year treasury is the most stable asset in the world. It's not supposed to move like this. That's a huge move, 142 basis points currently. In the short term, again, short term, things are different. The market it's loving it, right? Because it's like finally, like we get these yields can finally come back down, and the market's breathing a sigh of relief right now. However, I think the market's going to realize that this is not a good thing, probably over the next couple of weeks, maybe the next month, because if this continues ripping higher, that really means that we're headed to a nasty recession. So just be careful of that. But in the short term, the market's just happy that yields aren't surging. So just be careful of that dynamic right now. In the short term, nice squeeze into Friday. We'll see what we do. I'm not convinced of anything for Monday. Normally, I would say with this type of pattern at face value, I would say we're going to gap and go Monday. But the fact that we have CPI on Thursday leads me to believe that we might, back off of 390, we might chop around, and then maybe we go up on the CPI. That's certainly a possibility. Another thing too, I know a lot of people are looking to short this 390 area. I would not do that. You just came down here and compressed for 3-4 weeks, and now we're potentially breaking out of that range. So that compression is going to result in a big move, and it's also a failed bear flag too. So usually when you have a failed pattern, it usually results in a violent move to the opposite direction. So I would not short here. Personally, I would look higher here. I do think the market wants to push up, at least for the next couple of weeks, which is what I have penciled in. Anyways, also, I will be doing this weekend, I will have the full 2022 review and 2023 kind of forecast. So that will be getting done. I just wanted to see what was going to happen this first week of January 1st before I really went into that. But anyways, over here to the Qs, same thing here. Nice outside candle today. A little bit of weakness, not above this bar or this bar, but on the weekly, this is fine. I also have a really strong buy signal here on the weekly, not so much of the Qs, but more on the spiders. 3 higher lows there, 3 tails. So that is usually going to be a good signal going into next week. But I told you guys, again, part of the reason why I think that bear flag on the daily is going to fail, A, there's too many bears and they're really loud, but B, you got to just look at the weekly. The more dominant time frame, you 1, 2, 3, 4 down, no bounces into this green bar low. Usually that's going to get defended. So I think we need to, like I said yesterday, we need to get a bounce, reset the technicals, and then maybe the market can move lower after that. But in the short term, nice price action here, and bears just getting caught off sides. Russell 2000, another thing I mentioned too. Look at the Russell here. So the Russell's way above that gap fill from the 15th. It's been above that for quite a while. And what do we know that tells us? The Russell, it's people don't put their money in the Russell if they're looking to be safe. They put it because they want risk. So their IWM outperforming is an indicator that we should have some bullish moves here in the short term, and that's obviously come to fruition today. Dow here breaking out of this bear wedge. It's basically just hovering right on that trend line there. So that was the former failed inside bar low, and we're backing off of that right now. We were above it earlier. I do think the Dow still has a little bit of upside. We'll watch that gap up there. But I think the Dow has the least amount of upside as far as the major indices here in the short term, just because it's the least oversold. So it's really not oversold, but Dow up 2% as well. So we'll just leave it at that. Anyways, over to the semis, we already briefly touched on them, but nice outside move. Again, you got above that 208 red bar high. I told you guys earlier that would be getting above that would result in a failed inside bar. That's happened. We came up here. Looks like we filled the gap 212.30, and the high of the day, 212.91. So we filled that gap. This will probably want to test 215. Then if you get through that, you got this red bar here at 220-ish, 200 moving average. So there should be some resistance up there. But again, nice move for the semis and nice move for the market. IGV as well. So that made, that made lower lows here, monthly lower lows, basically, below all the lows from all of December and most of November there. But again, it got defended by the end of the day. Nice reversal there for IGV. So it's holding up for now. We'll just leave it at that. And then the transports, this is the big one. Look at the big outside move here for the transports, up 3.36%. That does indicate further upside in the market. Now, again, the dynamic, I'll explain it again. In the big picture, meaning the next 2-3 weeks, you have a failure here, right? So you closed above that. It's a failed inside bar on the weekly. Now, in a couple of weeks, that should play out. What we'd expect here is, now that we have a nice move here, we'd expect lower highs. So it doesn't mean we can't bid up. It just means that we're likely to make lower highs. We're not going to go up to 15,000 or anything like that. And that will come into play soon. But for now, this is a good sign for the market. Take a look at the Jets again, up 3 days in a row, just blowing through that 200 moving average. This might want to get back to double top around 19. Let's look at the weekly. Well, you're basically right into that 50-week moving average. So we'll see how it responds there. But yeah, big time move for the Jets. There was lots of noise surrounding the Southwest is, the cancellations, sell. And wasn't that the exact low? So there you go. Southwest up 4.68% here. Nice recovery for LUV and the Jets. Market set to close here. So there is the bell right there. You see the VIXY upticking a little bit. That's totally normal on these for the last 10 minutes of a big update. But either way you slice it, nice move there. Tesla closing near the highs. Apple just off the highs. Nice move, Russell. Everything else looks pretty good here. But anyways, we already talked about rates. I still would have felt better. I think this is probably done here. I would have felt better if we got up to 40, 50. It still could happen. I wouldn't rule it out. But nice little dump there for the 30-year yield, the 10-year yield as well. So back into that trend line. If that breaks, that would do a little bit of technical damage here. So yields on the downtick right now. And obviously, we got to monitor them closely as they tell us a lot about the market. All right, over to homebuilders XHB again, continuing to be an outperformer, up 2.35%. And again, we've been talking about this. This is on the uptick. I think this wants to go possibly up to double top, maybe even pierce it. ITB, same thing. This will probably pierce the double top, maybe even up to 66. So homebuilders holding up well and continuing to outperform the market here. I think this is kind of the last gasp move, though, just so everybody's aware here. VNQ, again, nice day, just like everything else, up 2.7. It reclaimed this area on a weekly close. I still don't love it, though. It's just, I don't like that failed pattern. You do have the green bar, which was defended on the weekly, so we'll give it that right now, but I do expect this to make lower highs, like a lot of other things. XLF here, nice power move outside of this trend line, so we can get rid of that. First resistance will be at this, well, it's a green bar because it technically was up on the day, but this reversal bar high, so right around 36. You also have this one above it. So short term, XLF holding up, and yeah, nice move there for the Finns. This also is on borrowed time as well, so just be aware of that. That's why I've held off on reshorting those. We shorted financials a couple of times late last fall, late last year, paid out both times. But I've been avoiding it right now because I'm expecting, like I said, a nice move in the spiders. Here you can see XBD getting above this. This actually failed now. So you're above this red bar high, you closed above it, and you closed above that channel. So XBD can get a bid here for sure. You got a pivot there at 480. Maybe that's where it wants to go in the short term. But nice little break of that little bear wedge. So broker dealers holding up much better. These will be a short though, before you know it. So just be aware of that. Crude, basically a nothing burger here, up 2 pennies on the futures. I do think this has to go lower. Nothing's really changed there. Again, could you put in an inverse head and shoulders? Yes, but we don't want to bet on that because it's not a pattern yet. Until it comes up and triggers, it's not a pattern. So, we can speculate, but we're not going to take any positions right now. I'm not in love with crude. I do think it has to go lower. XLE up. It did come off the highs a little bit, so it was up a little over 2%, but it came off the highs. You touched that 50 moving average. You touched this green bar low, obviously, throughout last week, and we backed off of it by the end of the day again. Starting to see a little bit more of a rotation here from energy out of energy into other things. Take a look at XLV. They saved this kind of candle, this kind of trend line here by the end of the day, but look at UNH. So this actually closed. So wow, they actually managed to close this green today, but this is a massive breakdown on UNH. So I think some money finally coming out of this sector here and possibly going into some other things here, at least in the near term. Again, we're not looking for new highs or anything like that, but I do think tech has to at least reset the technicals in kind of like the short term ish. Anyway, so yeah, over to XOP. Okay, got back above this trend line on a weekly close. So you know what, they saved it. We'll give it that for now. This is still going lower. Nothing has really changed, but it did get a little bit of a bid, so we respect it for the time being. An OIH weekly close above that trend line. So nice move there, but not above this red bar. So this is still a monster power bar here on the weekly. I think this is on borrowed time as well. These things need to do some serious backing and filling, in the energy trade, if you ask me, is very crowded still. Nat gas did come off the lows. It basically touched 350 to get down to 352. I think this finally gets relief next week. You have 1, 2, 3 bar sell into the 200-week moving average. So this should come up, and I would at least think probably 475, 485, maybe even $5. I mean, if we assume that this is a low, and again, it couldn't, might not be, but if we assume this is low, a 50% retrace gets you to 530. Now 382 is right here where that breakdown area was. So, and it's also ridiculously oversold here, but nat gas can do those things. So just be aware of that. But I do favor the upside here on a risk rewards standpoint for Natty. Dollar index. I had a nice move yesterday. They tried to fake you out. And I said, look, I still think the dollar's got to go lower. And that's a pretty good outside engulfing reversal there on the DXY. Look at the weekly. So we closed below the 50-week moving average again. Now, we didn't take out last week's low. We didn't take out this candle. But this does look poised to make one more move down. And the dollar will be a buy again. Just be patient with it. It does have to move a little bit lower here. But yeah, nice reversal there today, and obviously that helping out stocks. Gold also reversed really well. Take a look at the pre-market. Oops, there we go. So, got a nice bid, real drop and pop kind of setup, and then bam, just blew up around 10 a.m. Silver as well. Okay, so with silver and gold, these can go higher. Don't let this pattern fool you. Or don't let today's price action fool you. These can still go a little bit higher, but they're like, don't chase them. They're not gonna go much higher. I doubt. This is a rising wedge break. A lot of the times with the rising wedge, you get a fake break at first, and then you get up another lower high, or maybe even a higher high, and then it comes back down. Do not buy into this pattern right now. Same thing with gold. Could it get up to 1880, 1885? Absolutely. There's nothing to say it can't do that. Could it always overshoot? Commodities tend to do that. But you're going into a lot of weekly resistance here. So just be aware of that with gold. But yeah, nice move here in the short term, and it's just had a nice run off the lows. But I think that the move is about done. For GDX, I think it can get up to about 33. So that's not much. Well, it's actually a decent move. Yeah, so right up into these pivots there. So maybe a little bit more upside on the miners, but overall the metals, I am not a buyer here. I am waiting for a correction. Platinum as well, nice power move here. I think platinum just kind of does what it wants. Sometimes just huge reversal there. You had a pullback candle there. Again, I wouldn't chase this higher either. We're getting to the point where you're closer to resistance than you are support. So just be aware of that, but nice power move there in platinum. I love it. What can you say? It's had a really nice move off the lows last summer. Then copper, nice bid today. Again, still has this nice weekly inside pattern. So green bar, 1, 2, 3, 4, 5 weeks inside. Might need to do a little bit more, but it can get above 396. And if you get a weekly close above that level, copper, to me, negates this bear pattern, and this can go higher as well. So keep that on your radar for next week. Bitcoin here also having, a modest day, up 27 basis points, but it came off the highs pretty sharply. Again, just kind of doing its own thing here. This ultimately will go lower, but I'm kind of in the camp that maybe it can get a squeeze up if we get some nice, if the rest of the market does participate in some of the rally next week. So anyways, back over to the spiders. Yeah, so close at 387.87. It looks like they just closed it below this kind of hourly trend line here. I wouldn't make too much out of that. There's the 4 hour right there. You can see, is it that big of a deal? I don't think so. The weekly time frame is really a good set. By the way, look at the volume there. Buy volume versus all the sell volume. We talked about that yesterday. Weekly here, nice power candle, got above the 20-week moving average as well. So this should be, this should be a nice little bid for us here. I'm not looking for, 20 handles on the spiders, but we should get some type of a move here, at least next week and maybe even the week after. So anyways, guys, I'm going to wrap it up here. You guys take care. Come find me at carnivoretrades.com. Talk to you all tomorrow.